Hi folks, one of your classmates asked me to do a video. This is from chapter 8. It's one of the tax returns. It's the first one, I believe. So anyway, she asked if I could go over this since she's running into a little bit of trouble with it. So let's take a look. So I highlighted some things here. So Reba, she's a teacher. She made $38,000. We're definitely going to need that. That's her salary. She also gets $1,200 a month of alimony payments from her husband, and they divorced in 2016. And that's important because this then becomes income to her for Schedule 1. Okay. Then it says she got some rental payments from tenants. She rents out an apartment building, and she incurred expenses. Now that normally goes on Schedule E. They did not have you do a Schedule E here, but you'll see where that nets itself out. Okay. Then her daughter's 20. Anyway, so Reba provides more than one half of her support. Okay. Now the problem is she's going to be able to get a dependent deduction, but not the child deduction. Okay, so the lower of the two. They talk about moving, but those expenses are not deductible. They're only deductible for the military. Then they mention that the daughter decides to go back to school. And Reba helped out, paid $500 tuition, and if possible, she'd want to claim the education expense. So remember, education expenses have a phase out, right? So we're going to have to take a look at the phase out there. And then the next question is, she has some of these itemized deductions, right? And so she paid these different items here. And so the question then, are these enough? Should we do itemized or not itemized? And she has some medical items here, right? And these medical items, you remember, it's 7.5% of your AGI, right? And the difference there, okay? Later on, it says she ran into a street sign. Anyway, she wasn't able to work for 2 months, and she got some disability. She got $2,000 from her disability insurance. The school district pays for 60%. She pays for 40%. So what's going to wind up happening there, the part that she pays for, right? The part that the school pays for, they're going to have to count that as income, okay? Because what happens is you get if whatever portion of that your employer pays for, because it's part of a benefit, it's a non-taxable benefit, then that becomes income to you, but not the 40%, because that was from Reba herself. She also has some investments. She has some interest income. She has corporate bonds. Let's see. They talk about her stock portfolio, but she didn't sell any stock, so we're not going to have any capital gains. And again, some interest. Heather reported some interest income, but that was for Heather. And then Reba paid $10,000 in taxes. Okay. And here they ask you to do Reba's tax return. So let's take a look at a few of these items, okay? So the first thing is, let me put this highlighter on. Okay, the first thing is, okay, so the salary here, that's definitely, right, coming in, that's her salary. The alimony she received, that's taxable income, remember, because it was in 2016, right? Rental receipts, $50,000. Like I said, normally this goes on Schedule E, but they're just showing you how to add up all these things here, right? Now the disability insurance payments, remember, she got $2,000, and 60% of that, her company paid 60%, so she's got to report $1,200 of that, 60%, okay? Interest from corporate bonds, $2,200. And so here's her gross income. Interest from municipal bonds, nothing, because muni bonds are not taxed, right? So here is her gross income. Now, what are the deductions for AGI before you get to AGI? That would be the $19,500 in the expenses on her property. So you see the difference between these two, this $50,000 right here, between this one. No, not that one. Oops, let me go back. Stop. This rental receipt right here, this guy, between that one and this expenses, that's going to wind up, normally it's on, so you have to fill out Schedule E, but you're going to wind up seeing it on Schedule 1, okay? So there's your total for AGI deductions, right? So her AGI is $86,300. Now remember, that's significant because when we take a look at that, phase outs are usually done or always done off of AGI. Okay. Now the next thing, what kind of deductions could she possibly have? So the standard deduction, she's head of household. Okay, so she's head of household. So you have to look up what it is, and for the year that they're talking about here, that deduction is $20,800. So we take a look. She paid state income taxes. They gave us of $5,800. Okay, you add that up. She gave charitable contributions of $12,500. Okay, so right now with those two, she's at about let's see, what's that? 18,300. Now for medical expenses, what you have to do, you have to add all those medical expenses up. And then you have to take, I can't really write it here, but see this AGI? Times 7.5%. So this would be this number times, it's going to times 7.5% minus whatever that is, medical. And what that difference is, that difference turns out to be 3,130. I don't know where that one came from. I think that's a typo. Okay? All right? So, there's a medical expense. So when you add all that up, it comes to 21,430. Well, because 21,430 is higher than 20,800, we use that. We use the itemized deduction, and so that gives us its taxable income. Okay? That's her taxable income right there. Okay? Now, how much tax is that? So in order to do that, you'd have to go to the head of household, and you'd have to look this number up, and there'd be a calculation, and we'll take a look at that in just a minute, and there's the amount of tax. Okay. She also had some credits, a couple of credits. We'll go over those, right? $685. She prepaid tax, so she's going to get a refund of $2,712. All right, I'm going to stop it right here, and I'm going to make the second part of this video in just a moment. Be right back.